Major changes are coming to your credit report in 2025, and if you're not ready, your score could take a serious hit. From buy now, pay later accounts being added to your credit, to medical debt possibly getting wiped clean, to AI deciding your credit worthiness based on your rent, job history, even your online habits. Yeah, it's getting wild out here. Before we move forward, take a moment to subscribe to our channel. In today's video, we're breaking down 5 major changes to credit scores and credit reports that could affect millions of Americans in 2025. These updates are a big deal, whether you're trying to buy a home, finance a car, or just improve your financial standing. Some of these changes could boost your credit score, while others might hurt it if you're not careful. So let's walk through each one step by step, break it down in plain English, and talk about what you can do right now to prepare. 1. Buy now, pay later, BNPL. Accounts reported to credit bureaus. The first big change. Buy now, pay later services like Afterpay, Klarna, and PayPal's Pay in 4 will begin reporting to credit bureaus like Experian, Equifax, and TransUnion. These services let you split a purchase into 4 or more payments, usually without interest. Sounds helpful, right? But here's the catch. In the past, these accounts weren't typically reported to credit agencies. That's about to change. Starting in 2025, BNPL accounts will start showing up on your credit report, which can help or hurt your score depending on how you manage them. If you make on-time payments, it could help boost your score. But if you miss payments or open too many at once, it could backfire. Plus, because they're short-term loans, they can lower your average account age, which is a key factor in credit scoring. And lenders may view these accounts as new debts when deciding how much to loan you for a car or home. So what should you do? Pay off any BNPL purchases early if possible, before they start reporting. And if you're unsure whether a recent BNPL transaction is affecting your report, check your credit for free at annualcreditreport.com. 2. Medical debt may be removed from credit reports. The second major update, medical debt might soon be erased from your credit report altogether. And that's huge. The Consumer Financial Protection Bureau, CFPB, announced a rule to ban medical debt from being used in credit scoring or loan decisions. That includes past due hospital bills and other medical collections, even if they were never paid. Currently, over $49 billion in medical debt sits on Americans' credit reports, often from emergencies or insurance issues. If this rule takes effect as planned, the average credit score could jump by 20 points or more for those affected. And here's a stat for you. It could help 22,000 more people qualify for affordable mortgages every year. The proposed date for this change is March 17, 2025. However, with the Trump administration freezing new CFPB actions, this could be delayed or challenged. If it does go through, check your credit report around that time to see if your medical debts have been removed. But be patient. These changes can take weeks or even months to reflect. 3. Tri-merge credit reports might become bio-merge. Third, there's a big shakeup coming to mortgage lending. Right now, when you apply for a mortgage, lenders pull what's called a tri-merge report. That's your credit report from all 3 bureaus. But starting late 2025, mortgage giants Fannie Mae and Freddie Mac want to move to a bi-merge model, meaning they'll only use 2 out of the 3. Why? It could streamline the process, reduce fees, and eliminate duplicate negative items. But that's not all. They're also testing a new scoring model, VantageScore 4.0 instead of the traditional FICO score. VantageScore 4.0 includes more real-time data and weighs certain behaviors differently. It might make it easier for people with limited credit history or those recovering from past issues to qualify for home loans. But here's the key. Lenders are not required to use this new model. It's optional. So some may stick to FICO, while others try VantageScore. So if you're planning to buy a home in 2025 or 2026, ask your lender what models they use. And maybe check both your FICO and VantageScore to be prepared. 4. Possible 10% cap on credit card interest rates. Let's talk about credit cards. there's been a lot of talk around capping credit card interest rates at 10%. Currently, the average rate is 20% or higher. Some cards go up to 25% or more, especially if you miss a payment. So imagine owing $10,000 on a card at 20% APR. That's $2,000 in interest every year. A 10% cap would cut that in half. If this goes into effect, it could save people thousands and help them pay down debt faster. But banks don't like losing money. They could respond by making it harder to get approved, especially for people with lower credit scores. They might raise annual fees or add hidden charges. This is still in the proposal phase and needs approval from Congress, so it's not final. Still, it's a good reminder. Only spend on your credit card what you can afford to pay in full. For example, if you want that $500 TV, make sure you already have that $500 in your bank account. Pay it off before the due date. Avoid interest entirely, and keep your credit utilization low. That alone can boost your score over time. 5. AI-powered credit scoring models. The fifth and final change is pretty futuristic. AI may soon play a role in how your credit score is calculated. Instead of just looking at loans and credit cards, AI could start including your rent payments, utility bills, job history, and even your shopping habits or social media activity into your score. This could be a game changer, especially for people who don't use credit cards or loans often. If you're someone who always pays rent and utilities on time, this could finally count in your favor. Think about it like this. You stay at the same job for 5 years, pay rent on time every month, and keep a positive balance in your checking account. AI might soon translate all that into a higher credit score, even if you've never had a loan. But not everyone is excited. Critics are worried it's too much data and feels a little too close to a social credit system. Kind of like what you hear about in China. Privacy is a concern. Still, the basic 5 factors, payment history, credit utilization, account age, mix of accounts and inquiries, aren't going away. AI might just become another layer on top. So let's recap real quick. Buy now, pay later accounts will soon affect your credit. Medical debt might disappear from reports. Mortgage lenders may start using only 2 bureaus, and Vantage Score. A cap on credit card interest rates could save borrowers money. AI could make scoring more detailed, and possibly more fair. Which of these changes do you think will help you the most, or worry you the most? Drop your thoughts in the comments below. If you found this helpful, give the video a thumbs up, share it with a friend, and subscribe for more credit updates like this.